Today, folks, we got to talk about MineHub Technologies, a company quoted by analysts as the Palantir of the commodity sector. When it comes to commodities and precious metals, the supply chain is incredibly complex, which is where MineHub Technology came in with a suite of software that is offering incredible efficiencies, allowing margin expansion and less overhead work. We got to break this down as it trades on the TSXV under MHUB and the OTCQB under MHUBF. Keep in mind, these are opinions of my own. MineHub Technologies did reach out. This is part of sponsored content. I'm leaving all the disclaimers in the description below, but if you're on a path to financial independence, if you love discovering stocks, especially in the commodity space during this precious metal renaissance, considering that subscribe button because this is an interesting company. And diving right into this, trading for around a $51 million market cap, the company's gone through some wild volatility this year, but is still trading up 80%, with analysts expecting this to go materially higher. And we'll talk about some of the analyst expectations in a moment, but MineHub is making commodity chains more efficient, resilient, and sustainable. For those that don't know, obviously the supply chain resilience, ESG compliance and emission accounting, trade regulations and sanctions, fraud preventions, data security and regulations all come into play in this, in the chain of moving commodities from mining to the actual buyer at the end. And they're claiming with their software, they could get a reduction in inventory on site by 66%. I mean, reduction in Excel usage by 90%, reduction in email around shipments and cybersecurity threats by 60%, and basically 8 weeks ahead in forecast ordering to reduce spot buying activities. And to give you a further breakdown, they have an incredible video here just to kind of supplement exactly everything this business is doing. So take a quick listen.
Metals and mining powers the world economy. In fact, $1.8 trillion worth of metals and minerals move across the planet every year, feeding industry with much needed raw materials to manufacture the products we use every day. The metals and mining supply chain is long. It involves hundreds of companies, thousands of people, and millions of interactions. The whole journey of moving raw materials from the mine, over land, in trucks and trains, through the ports, and across the oceans to the smelter and beyond, is weighed down by manual processes, back and forth interactions, and red tape, which are time-consuming and costly. For example, moving one container from Africa to the Netherlands involves more than 30 organizations, 200 interactions, 100 people, and a timeline of 34 days. 30% of this time and effort is wasted on simply processing documents. On a global scale, over $150 billion is lost on multi-party and paper-based processes every year. But all of that is changing. Right here, right now, with MineHub, a digital platform for the metals and mining industry with a rapid deployment model for speed and scalability. By implementing an operating system for the 21st century, we take all the complexity and streamline it into simple, immediate digital interactions, which means you act on real-time data today, instead of being busy reconciling yesterday's documents. The MineHub platform allows for far greater collaboration between all parties: miners, traders, processors, financiers, carriers, inspectors, and ports, in real time and digitally. It's estimated that digital transformation will generate $320 billion of value in the metal and mining industry over the next decade, including $77 billion through an integrated ecosystem, exchanging data throughout the world. And although the MineHub platform has a focus on metals and mining currently, it is a technology that has the potential to expand into other areas too. Our platform addresses some of the key challenges that can be found in other commodity supply chains and industries. MineHub is a global operation. We have offices around the world, managed by a world-class team. The future is MineHub. The future is bright. MineHub. The transformation starts right here, right now.
Now, I want to take a look more in-depthly at analyst expectations, price targets, some of the risk, and where this company is going in the near term. With first and foremost, some of the investment highlights that really stuck out to me is the customer base that includes some of the largest resource companies in the world, including Sumitomo Corp, BHP, Codelco, and Southwire. They're also looking at near-term positive cash flow, and they have a very strong management team, claiming that the buyers have a 15% potential increase to EBITDA margins, basically reducing shipment delays, avoiding raw material shortage, eliminating lost production and factory downtime, with the seller getting a 10% potential increase to share of wallet, which shorten lengthy lead times, improve supplier performance, and quicker payment cycles. If we dive down into the share structure, they do have 30% insider and close associates, 25% institutional and strategic, and 45% retail. So it does have a pretty tight share structure that could support some potential upside if a lot of hype comes into the stock. But I want to take a look at what analysts are saying, because they are calling this the Palantir, but built for mining. And they're calling it this because Palantir is the brain behind defense and intelligence. Then MineHub is positioning itself to be the brain behind global mining supply chains, which has a sticky SaaS revenue, critical infrastructure, and is extremely hard to replicate once integrated. And this article and the analysts behind this are coming from MHUBF.com, which are offering a recently issued 80-cent price target on the stock. And we're going to take a look at this more in depthly, and you can kind of take a look at the full article right here, which is where we're going to be getting some of the risks and better understanding of the company from. And if you want more articles like this, because they do a great job integrating the risk versus reward, I'm going to leave the link down in the description. It's completely free to sign up to basically these reports. But if we take a look and we just kind of look at the summary here of the investment thesis, MineHub's platform has achieved the most difficult milestone for an early stage enterprise SaaS business, proving real world utility and adoption in a mission critical process with nearly 15 billion GMV processed annually, sticky flagship customers, and 198 counterparties already active on the platform. MineHub has demonstrated clear product market fit and basically the beginning of a powerful network effect. They're claiming that some of the upcoming catalysts include basically the release of their earnings, which is projected for September 29, 2025. The Q2 full year 2026 call is less about headline revenue and more about evidence of SaaS monetization, gross margin recovery, customer expansion, and cash runway clarity. Any progress here could support the buy thesis and drive sentiment, including new enterprise agreements. If they do announce an additional tier 1 customer of the ecosystem expansion, whether it be miners, smelters, banks in Asia or Europe, would validate MineHub's network effect and provide immediate upside catalyst. Now, obviously, there's a lot going on here we could discuss further, but I do want to look at some of the key risks, because obviously you can't talk about the upside with what risk we're taking on. And honestly, I think some of these risks right now are fairly mitigated, but there's obviously broken unit economic risk. With gross margins of just 24% and quarterly cash burn of 1.5 million, profitability is impossible at the current scale. The company is facing a real-world going concern that is reliant on continual and likely dilutive financing, but I will point out they are raising capital through private placements through summer, and I think that's going to help bolster the balance sheet during a period where their stock has been doing exceptionally well. So they did some dilutive measures at a great time to hopefully fund a lot of what they're doing, at least in the near term, while they continue to build out clients and again look toward that near-term cash flow positivity. But if we take this a little bit more in depthly, I mean, they talk about some of the competitive disadvantages, but because they're a first mover here, I think it does give them some upside and market penetration beyond maybe some of the majors like Oracle out there. But there are customer concentration risks that come with that, with growth dependent heavily on Codelco's ecosystem rather than broad adoption. As for Q1, full year 26, SaaS revenue dipped linked to sanctions on single customer, shows how exposed the business is to idiosyncratic shocks. That's obviously a concern here. And they are mentioning some of the fragile capital structure with the shift from long-term debentures to on-demand loans that highlight investor fatigue. But right now, I think there's still some strong, support within the stock, and they are raising some capital. So I think that's putting them in a much more healthier position overall. The team is very strong. The competitive landscape is relatively interesting, but this company is a leader, and kind of encapsulating all of this, guys, I think it is a fairly good valuation, putting an 80-cent price target on the company, because the assumptions are basically that landing another flagship Encore client, accelerating ARR growth to 60%, reaching 3.5 million for full year 2026, and gross margin recovery to 55%, showing scalability and cost discipline, and improved capital market narrative with investors shifting from turnaround binary to emerging SaaS network leader, I think could substantially be quite a bit higher. They do talk about reasonable multiples on the company, but this is done really intelligently by who's running this article, and I highly recommend taking a deeper look with the bull case here. So I'm going to leave, again, the link down in the description below, because that does leave potential upside here, of quite a potential upside if we're going from 54 cents today with the potential of getting to 80 cents. And I still think there could be some potential beyond that, but I will pass that question off to you. This is purely opinions of my own, for entertainment purposes only. Again, disclaimers down in the description, but let me know what you think in that comment section, and consider subscribing for news catalysts that come down the wire. I will bring it to you here. But on that, as always, I look forward to catching you in the next one.